first step, the moment you set up your foundation, make sure that within 3 months from the day you get your license, you are registering with UAE Federal Tax Authority and obtaining the tax number for corporate tax.
How does DIFC Family Foundations plan the next generation?
If I die, my son will get benefits from my assets, but he will not become owner of the asset.
Welcome back, everyone. Today we are discussing on a topic which is crucial for high net worth individuals as well as the business owners: asset protection and structured planning. What exactly is this? How do you protect your wealth? How do you pass it on to the next generation? All these discussions will be done. So we have with us Mr. Feroz, who's the CEO of Flying Color Tax Consultant and also a tax agent for direct and indirect taxes. Welcome, Feroz.
Thank you, Rijo. Thank you for having me here. So today it's more about family wealth protection and succession planning. I'm ready to take your questions, so you can start asking questions.
Absolutely. So let's break this down. Basically, going to talk about DIFC Foundations, SPVs. Why exactly Dubai is a global hub? Let's talk and understand about what exactly is this foundation.
So foundation has different objective. Now, today what we are going to discuss here is on the family foundation. So there are other type of foundation, example, charitable foundation, educational foundation. This has a different objective. What we are going to discuss here today is a family foundation. The purpose of family foundation, which is for protecting an individual's asset and do a proper succession planning without a court probate. That is the whole idea of setting up a foundation. Foundation is a unique model. First of all, foundation, can we set the foundation anywhere in Dubai or anywhere in UAE? The answer is no. There are certain jurisdictions where the families can set up the foundation. So those areas are like DIFC, which is Dubai International Financial Center, and ADGM, which is Abu Dhabi Global Market, and RAKICC, which is in Ras Al Khaimah. So these are the three jurisdictions a family can set up their foundation.
In this, I have a question. Basically, to understand this, how different is this from a company? Or maybe can we say this, a foundation is also a trust?
Not really. I'll take that question into two parts. First of all, is a foundation is equal to a company? The answer is no.
Okay.
So I just want to ask a question to you, like who has there in a company, like what we call a company structure?
We have a shareholder, we have management.
Manager, director.
Correct.
Foundation has no shareholder. That means no shares.
Correct. Okay.
Foundation has no manager, no director. That's why I told you in the starting, it's a unique structure. Now, foundation, whoever is setting up the foundation, that person is called founder.
Okay.
Now, the founder will have beneficiaries where the founder wants to pass the benefits of the assets from the foundation. And who will monitor whether everything is happening properly? Those people are called council members. So instead of shareholders, directors, managers, in foundation it is founder, council member and beneficiaries. So it is not a company. That is first thing. Second thing, you asked about trust. Trust is very common in the countries, European countries and or mainly the common law jurisdiction countries. So trust, how does it function? Like if you set up a trust, you become the settler and you appoint a trustee, and that trustee will manage your asset based on the deed what you made. It's called trust deed.
Okay.
So that is not how the foundation is functioning. Foundation, as a founder, someone setting up a foundation and they are writing their charter and bylaws. Which is, you can consider it as a wish list, like a founder, what he want to pass it on to the next generation, how he want the foundation to function. So this, he is writing it in a document which is called charter and bylaws. And the role of the council members is to execute the charter or execute the wish list, whatever said by the founder. Now, the main difference is that when it comes to trust, you are appointing a trustee and the trustee become the ultimate beneficial ownership who has the full control. Versus in foundation, you being a founder, you can also become a council member. So basically, it will give you more powers comparing to trust. So I think that makes the clear distinction.
Exactly, yes. But you also mentioned about the free zone, like DIFC. So I would like to get an understanding. Why typically DIFC foundations? In what kind of situation is DIFC foundation formed?
So UAE is a Muslim country. So of course the country has a civil law. Now DIFC, ADGM, these are the two jurisdictions which has a separate court. DIFC has DIFC court, ADGM has ADGM court. These two courts follow common law principles, which is English law, UK law.
Correct. Okay.
So that is the primary thing. So people who want to follow the common law principles and have their assets under the common law jurisdiction, for sure they should have the presence in the jurisdiction like DIFC. Okay. That's the main distinct.
But I would like to get an understanding. Okay, so let's deep dive into the tax part of it. Okay. What are the tax benefit to set up a foundation in DIFC? So what exactly would be that?
So it's everyone's question, like is foundation is getting any tax benefits? Yes, of course foundation is getting tax benefits. Now, as I explained to you, the foundation, you can set it up either in DIFC or ADGM. Of course, RAKICC is also there. Now, let's talk about DIFC. DIFC itself is a qualifying free zone. Now, what does that mean, qualifying free zone? You can watch our other video. We will put the I button in the, you can click there and you can watch about the qualifying free zone in detail. But I will make it in short that being a qualifying free zone, a DIFC companies can get a 0% corporate tax on their certain incomes.
Oh, okay.
So being a passive income generating company, which is foundation is not an operating company.
Correct.
So it's a passive income generating entity, can also get the 0% corporate tax. Now, is it just because you set up a foundation, you will get 0% corporate tax? The answer is no. You need to structure it properly. You need to satisfy certain conditions. Like many people, like they directly get into the assumption that my company is in the free zone, so I'm getting 0% corporate tax. My foundation is in the DIFC, so I get the 0% corporate tax. Actually, that's how it will not work. Now, foundation has one more additional benefit, that foundation can apply for a tax transparency. Now, what is tax transparency? You can make your foundation a pass-through entity.
Okay.
Means once you set up your foundation, you are telling to the authority that it's not a business. It is to set up the setup is mainly for the benefit of my family, and the foundation is not getting into any active business. So when you submit this application to the authority will transfer the tax liability from foundation to the beneficiaries.
Okay.
Now, as you know, will UAE tax on personal income?
No, that's not possible.
So that makes your foundation's income absolutely tax-free.
Okay.
So you can mainly focus on two areas, either to make your foundation as a qualifying free zone and get a 0% corporate tax, which is attached with conditions. Let's say if you feel that you are not going to meet those conditions, then you can apply the pass-through structure for foundation and pass the tax liability to the beneficiaries. Now, is applying tax transparency is always good? Now, think of a situation, you are a UK tax resident and you are applying the tax transparency in UAE. Of course, UAE authority will consider it, approve it, and then transfer the tax liability to you. Now, being a tax resident in UK, you have an obligation to report it to the HMRC, UK tax authority. So, there is no blanket solution. We need to analyze the tax position case by case and come to a conclusion. This is very crucial. Setting up something is very easy, but setting up it properly without having future complication, especially foundation, is not for a short-term objective. It has long-term objective and visions. So the setup is very important in a proper way. And tax benefits, coming back to that point, yes, tax benefits are there, but how to get it? Of course, you need to have a professional advice on structuring the foundation.
But I would like to ask this question. I've heard this somewhere where DIFC foundations. Is there any kind of like I've heard this 50-year tax-free income? Like is that something?
So this is again going back to the same question, qualifying free zone. So
Uh-huh.
when the UAE announced the corporate tax law,
Mhm.
they have classified free zone as qualifying free zone,
Okay.
whereby the free zone entities will get a 0% corporate tax on the uh, income they are generating.
Okay.
Now, again, if we get into that, then we will deviate.
Yeah, deviate.
As
I
I
got
told,
it.
we have done an exclusive podcast on qualifying free zone.
Mhm.
We will put the link in the comment.
Got it.
You should watch it. You will get more idea.
So if someone in the UK holding 10 million pound asset versus somebody who is here holding it in Dubai, what exactly is the benefit that he's getting while he's living? And sorry to say that, but yes, when he passes off, like what exactly is that?
No, I mean you don't need to feel sorry. It's a fact. Like everybody will die.
Correct.
But the thing here, what we need to do, like having a proper plan
Mhm.
that without having much complication, how I can pass my assets to my next generation or to whomever I want. So first of all, in UK, if you have an asset,
Mhm.
then of course UK taxes are high, the income tax.
Mhm.
But the more crucial part is on inheritance tax.
Mhm.
UK has inheritance tax close to 40%.
Mhm.
That means if a person pass away, that next generation, whoever is getting the assets, will be subject to 40% tax on the market value of that asset. So as on today, what is the value? On that value, close to 40% taxes will be applicable. Now, in UAE, the beauty is that there is no inheritance tax. There is no personal income tax. That means the example what you gave, 10 million pounds,
Mhm.
the inheritance tax itself is 4 million pounds.
Okay, but to understand this, what exactly would be the ongoing benefit of the tax, like foundation tax? Is there any annual tax on that?
So first of all, foundation should register for corporate tax and get their tax number. This is very much important.
Mhm.
As I told you, foundation can be 0% tax under qualifying free zone. Foundation can apply for tax transparency. This all come later. The first step, the moment you set up your foundation, make sure that within 3 months from the day you get your license, you are registering with UAE Federal Tax Authority and obtaining the tax number for corporate tax purpose. This is first.
Okay.
Second thing, you need to put an application if you want a tax transparency. So it's
Mhm.
not that automatically you get the tax transparency.
Mhm.
You need to submit an application.
Mhm.
When you need to submit an application, there is a deadline. Before end of your first financial year.
Mhm.
So let's say we are talking as on today, which is like let's say November 27th. Now today you set up a foundation and UAE generally follows January to December as their
Correct.
financial year.
Correct.
The first financial year will be November 25 to December
December.
26.
Correct.
So if you want to apply for the tax transparency, you have to submit an application before 31st December 2026. This is one thing.
Mhm.
Now, once you have submitted the application, FTA approved it, is your obligation is ending? No.
Mhm.
You need to submit an annual declaration.
Okay.
This annual declaration you have to submit every year.
Mhm.
Once your financial year finished, within 9 months, you have to submit the annual declaration.
Mhm.
So it's not that setting up a foundation, it's done and dust. No, there are ongoing compliances.
Okay.
As I mentioned, you need to start with registration. You need to, if you decide to apply for tax transparency, you are applying it, getting it approved, submitting an annual declaration. So you have ongoing compliance, but in UAE it is like that there are compliance. As long as you manage the compliance well, then there will be no issue. The moment you mess up with the compliance, every problem starts.
And also, you mentioned about the beneficiaries part. When exactly are these beneficiaries getting their the distributions? How exactly that works?
So that is actually determined by the founder through the charter. So, example, you set up a foundation and you are writing the charter and bylaws and you are telling that as long as you are alive, you get the 100% benefits.
Mhm.
But God forbid something happens to you,
Mhm.
then after you, who will be getting the benefits?
Correct.
Now, be it you or your beneficiaries, other beneficiaries, whoever is getting that benefit, UAE has not going to tax on that particular income because there is no personal income tax. UAE clearly clarified it through multiple documents. If I tell you, there is a cabinet decision number 49 of 2023, that is clearly explained when an individual will be subject to corporate tax. And that is clearly telling that if an individual earning more than 1 million dirhams from business activities, means as you think like, you're acting as a freelancer or you're acting as a real estate broker, as an individual, not having a company. Now, from your business activity, if you earn more than 1 million dirhams, you as an individual subject to corporate tax.
Corporate tax, correct.
Versus when you calculate the 1 million dirhams, you don't need to consider three things. First thing, your wage, salary. That means if your salary, how much ever it is, not considered to calculate the 1 million. Your real estate investment income. So UAE is not taxing on your real estate investment income. You make millions, billions in real estate investment, you're going to pay
Zero tax.
Zero tax. Your personal investment income, any sort of personal investment, you have investments in shares, bonds, securities, whatever investments you have, even your crypto investments, UAE is not going to tax it. So it is very clear. So beneficiaries point of view, when you are talking, regardless who is the beneficiary, UAE is not going to tax the foundation as well as not going to tax the beneficiaries. So it's absolutely tax-free. When I'm telling tax-free, there are steps to be followed. As I told you, if you miss anything or if you do certain things wrongly,
Correct.
then entire things can go wrong.
Yes. Let's talk about the asset protection part, because we are actually discussing about that as well. So, how the, like, beyond tax, what about this asset protection? How does DIFC help you in this like asset protection? How does that work?
So as a founder, like a person who has a founder setting up the foundation, that person can have a charter, which you can call, like, in simple terms, like rather than talking charter bylaws, you can consider it like, you have a will.
Okay.
It's not a will. Don't misunderstand. It's a will. For
Yes.
easy understanding, I'm explaining to you.
Okay.
In a will, what you will write?
Okay.
In a will, you will write, okay, this is myself, Rijo, and these are my assets, and these are my beneficiaries, and they should get X amount, Y amount at this time. You are explaining everything. The same, you are making it as a legal document, similar like, for company, how we have memorandum of association.
Correct.
The same way, the foundation has charter and bylaws. Now, through this charter and bylaws, you are avoiding the court probate. Court probate in the sense, imagine if someone who has assets in UAE, be it movable asset, immobile asset, tangible asset, intangible asset. The moment the person passes away, all the UAE based assets are going to be frozen. The reason is that the UAE government wants to make sure that the person's will or the person's wish is getting executed. Also, if a person is a Muslim, the person's assets should be distributed as per the Sharia. So the government wants to make sure that the assets are frozen. So if the assets are frozen, what's going to happen? It's going to impact. Think like someone has an operating company here. They cannot even think of closing the business for a day also. It's impossible. Like then the business is almost gone.
Not even for hours.
Not even for hours. Exactly. So that is one side. Second thing, is it only for succession planning? No. It is for asset protection as well. Example, you set up a foundation. You gifted all your assets under a foundation. Tomorrow, of course, you should not get. But let's say you got some sort of creditors, some liability at your personal capacity. If you own asset, what is going to happen?
Everything will be gone.
Everything will be gone. Your liability will be settled with your assets.
Yes.
Now, is it, if now let's say you have a foundation and you transferred all these assets, you don't own anything.
Oh, okay.
So your intention should be clear here. You should not do like, you create some liability, then create a foundation and move your assets to foundation. That's not going to work. So you need to plan the things in advance, like not to wait to get some sort of liability. Of course, you should not get. But of course, chances are there, like we cannot predict.
You can't predict anything, yes.
Anything we can't predict. So we need to be anticipated. We need to be more thinking the advanced steps to do the things. Now, many people like I have this, I heard these things that foundation is for succession planning.
Mhm.
More than succession, it's protecting you from creditors and personal liabilities. That is also equally important.
Okay. 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 So, as per my understanding, any lawsuit or any kind of a difficulties in financials, the foundation is going to protect the asset.
Absolutely.
But it's like it's like a very sensitive topic that I'm going to take. What about the situations when it is in divorce? What exactly happens in that case?
This is a very, very famous question. Like, as I told you, your intention should be clear.
Correct.
So, if let's take that. Like, of course, it's a case. Like,
Correct.
we need to discuss the situation. If someone who is getting divorced,
Mhm.
then let's say there are certain situation they have to pay some compensation to the partner.
Mhm.
From where the person will pay?
Point.
From his own
Assets.
assets.
Correct.
If the assets are owned by a foundation, it's not owning anything basically.
Okay.
So let's not give wrong ideas. Let's stick with, just because you asked, I answered. Again, I'm stressing on this point. Your intention matters.
Correct. Correct. Got it. Got it. Oh, that's very insightful of the things. Yes. With regards to succession planning and foundations, I would like to get an understanding. How does DIFC family foundations plan the next generation?
Through the charter.
Okay.
So the charter is already registered, and if anything is happened to the founder,
Mhm.
founder's wish is already written in the charter, and this charter is highly customizable.
Mhm.
You can customize the charter through a DIFC approved lawyer or DIFC expert lawyers, and you can I'm just giving an example to you. Like,
Mhm.
I'm making a foundation, and I'm making my charter that if I die, my son will get benefits from my assets, but he will not become owner of the asset
Mhm.
until he get married.
Mhm.
So it's my wish.
Correct.
So he will get the ownership of the asset only when he get married. So what I'm trying to say is, like, you can customize your charter however you want. So once the founder pass away, what is going to happen is that the founder's assets are getting transferred to the next generation without the involvement of court.
Okay.
I have heard this, I have to touch this point without fail, that many people I heard this point that I have written a will.
Exactly. That was the next question. What exactly? How does it work?
I have a will, and I have registered my will in the court. I don't need a foundation.
Mhm.
First thing, foundation cannot replace will.
Mhm.
Will cannot replace foundation. In my opinion, if you ask me, if you want to protect your entire assets and interests, you need both. Ask
Okay.
me why.
Why? Yeah.
Okay. You set up a foundation.
Mhm.
You moved everything under foundation.
Mhm.
Something happens to you as a person, something happens to you. You have your car or your personal bank account in your name.
Correct.
Can foundation protect that?
No.
It's in your personal name.
Correct.
You need a will.
Wow. Okay.
Foundation cannot determine custody of your kids. You need to write, like, if something happens to me, my kids' custody will be, who will be the custodian of my kids?
Correct.
So this is one side. Just because you have a foundation, you cannot ignore will. On the other side, yes, you wrote a will, you registered.
Correct.
But who is deciding the execution of the will? It is decided by the court.
Code. Correct.
So you need to first take it to the court, and court will execute the will. Court will issue the order. Until then, your assets are frozen.
Oh.
I'm going back to that same point. Can you
Correct.
imagine your assets are frozen?
Never.
Think like maybe if you have a car,
Mhm.
it got frozen. Doesn't matter. Let it be in the garage. But think of an operating business. You
Mhm.
cannot think of freezing those business or the business account.
Correct.
So, in my opinion, if you ask, I will tell, if you really care about your wealth, you need both will and
As well,
foundation.
As per my understanding, it actually runs as per the family structure. Is that correct? So you also know, right? Sometimes the family structure circumstances keep changing. How does that work in such scenarios? Can we change that structure, or is there any possibility as such?
That is possible because founder has veto power. Founder has the full power to change, modify the charter, change the beneficiaries, change the council member. So founder can keep the veto power, or even founder can appoint. It's not a mandatory requirement. Founder can appoint a protector also. Now, who is a protector? Protector will have no much role when the founder is alive. But once founder pass away, the protector can oversee whether the council members are doing their job properly or not. If they are not doing their job, protector as the protector or guardian, sometimes it's called guardian, protector or guardian has the power to change the council members. So that's how the things are structured. It's very, very well structured. Like as I told, guardian is not a mandatory requirement, but it is optional. So any family situation changing, being a person who has the veto power, founder can make the amendments. That is 100% possible. They need to amend the charter and inform this to the DIFC authority.
Right. Now, understanding about the SPV, that special purpose vehicle, like what exactly is this? If you could guide me and give an understanding.
SPV is a passive holding company. We can certainly tell it this way. Like now the question, what is active holding company?
Correct.
Active holding company means like it's a proper company. You can have office, you can have employees. Versus SPV is a passive holding company. You will have a license. You will have a office address. If you want to have an office, you can have your own office, or you can have the office of a registered agent like flying color. And you can open your bank account. You cannot really run any operation using an SPV. So the main purpose of having an SPV is mainly to separate the liabilities. I'll give an example to you. Think of a situation, you have 5 operating companies. One into garments, one into, let's say, automobile, one into real estate, one into technology, one into consultants. Now, every operating business has a risk. Now, as an investor, you are thinking, if something goes wrong with my garments business, I don't want to affect my technology business.
Correct.
So what is you are going to do is like you're going to form special purpose vehicle, which is SPV we call. Then you are going to keep the SPV as the owner of each segment. So your garment section business will have a SPV. Your consultancy business will have an SPV. Your real estate will have an SPV. So basically you are dividing or you are not allowing, it's called asset ring fencing. So you are just separating the liabilities. Now all these SPVs will be ultimately owned by your foundation. So that's the whole idea. Now, is it mandatory to have an SPV? Can foundation directly own the shares of your operating company? Answer is yes. But many of the investors are not comfortable because, think of a situation, you have an operating company and you will have customers, suppliers. They all will be asking the KYC details of the owner.
Yes.
So everywhere you may not be comfortable of disclosing the owner.
Correct.
You don't want to disclose your foundation.
Correct.
Foundation is for for your family.
Exactly.
So mainly these are the purpose people come up with the SPVs, the passive holding companies, and they keep it between foundation and the operating companies.
And what about the tax benefits of this SPVs, if you could guide?
SPV, again, you are forming it in DIFC. If you remember the initial
condition,
all qualifying free zone. And if you satisfy the conditions, you will be eligible for 0% corporate tax on the income earned by SPV. This is one part. Now, interesting part, I told you, if you remember the tax transparency, the foundation can apply.
Correct.
Now, your SPV can also apply tax transparency.
Okay.
That is also possible. But there is one condition is that the SPV must be 100% owned by a foundation. So, if you have a foundation which has 5 SPVs, all 5 SPVs are owned by your foundation.
Okay.
You can apply the tax transparency from the SPV level and the tax liability will flow to foundation, and from foundation it will flow to the beneficiaries. So that chain required to be uninterrupted, and there are again situations, conditions things need to be satisfied, otherwise the things can go wrong. But
Okay.
to answer your question, whatever the way we can take an approach on the foundation, the same approach we can take on SPV also. Is it always recommended? Again,
Not always.
based on situation.
I would like to get an understanding. So in this, I have a like very weird question. Can we combine SPV and foundation together, like you mentioned earlier? Is there a possibility?
Combining in the sense, I'm assuming that you are asking, can this foundation own SPV?
Like yes, how does that work? So if at all we are actually saying that okay, foundation and SPV are joined together, they are working together. Is there a possibility?
The possibility is that if you want to separate your businesses and you want to have a ring fencing of your assets, then there is nothing wrong. You can bring only one thing. SPV forming is not a mandatory thing. And just having one SPV, this is another misconception. I heard this, like, when I discuss with my clients. All my assets are under my SPV. My SPV is in DIFC.
Correct.
DIFC is following common law. So I can do the, the asset protection.
Correct.
It's absolutely wrong.
Oh, okay.
The SPV is not for your asset protection. SPV is as good as a company. Only thing, it's a passive company. Now, people forming this structure, as I explained to you, to separate their liabilities, asset liabilities. Apart, again, it's not a mandatory. If you want, you can do. You don't want, you can directly own your asset under foundation also.
And is it legitimate?
It is 100% legitimate. It's not like you're doing something wrong. You have a like economic and valid reason to do that, because you're not trying to save taxes here, or you're not trying to do some sort of money laundering here. The only thing what you're doing is like, separating your liability based on your business interest. Or there could be a situation whereby think like someone has 3 kids and they want to keep their one business to one kid and another business to another kid. So they want to keep separate SPVs so that the ownership change after the founder's death will happen flawlessly. There are multiple reasons to do this.
Okay. And again, noticing that most of the people are actually choosing Dubai to actually structure their SPVs. So if you could give a light on that, what exactly makes Dubai so special when they're creating this?
So one thing, as I explained to you, access to the common law, common law principle following jurisdiction. Second thing, of course, taxation. As I told, no personal income tax, no inheritance tax. And it's always not only about taxation. There are the kind of quality of life Dubai is giving.
Correct.
The diversity of the country. There is no political instability in the country. The country is economically stable and politically stable. And of course, UAE is not a blacklisted country or grey listed country. UAE is in green list with OECD. UAE is green listed with the FATF, which is Financial Action Task Force. So the people who are migrating to UAE or who are choosing Dubai, they have multiple reasons.
Wow. So it's not only tax, it's like a complete package that they're getting.
100%. Tax is one of the
benefits.
Not one and all.
Okay. So let's take a practical setup thing. So how practical, if someone watching this video and wants to set up a DIFC foundation, how practical and feasible it is? Like, how does it work?
So here I need to give you an overview of Flying Colour Group. So Flying Colour is a group of company. We are in the market for more than 21 years. We are into different verticals of business. So starting with the Flying Colour business setup, where we help to set up the clients in companies in mainland, free zones, and handling the visa, golden visa, corporate bank account. Pretty much everything a business required to have a setup. This is one thing. Trademark registration example.
Perfect.
Flying Colour is also a corporate service provider in DIFC. We are a registered corporate service provider in DIFC. We are setting up the foundations, trust, SPVs, DIFC wills, like people want to register their wills in DIFC. Also, certain regulated licenses we are setting up. So that part we are covering. Flying Colour is also into real estate, which is a signature habitat real estate broker. We are mainly dealing with all leading developers. There is no intermediaries. And we are into the second citizenship program. primarily focusing in Caribbean island countries.
Oh,
And of course, the tax part, which is that's
Yes.
why I'm here. So, Flying Color Tax Consultant is not just a tax consultant; it's a tax agency.
Oh.
So, tax agency is entirely different from tax consultant.
Mhm.
Anyone can get a tax consultant's license, but
Not everyone can get that
to get a tax agency.
Mhm.
Of course, we have a video on difference between tax consultant and tax agency. We'll give the link in the description. You should watch.
Wonderful. So it's like a one-stop solution for everything.
That's what we want to give. We don't
Wonderful.
want our clients to knock multiple doors.
Wonderful, wonderful. And let's get into the commercial part. If you can guide, what exactly is the cost involved in setting up the foundation?
You can set up a one-on-one call to have a costing things, but I can guarantee you that it will be much lesser than you are setting up a foundation in certain countries like Singapore. We can discuss on commercial. I will be happy to share a proposal whenever you want. You can get in touch.
So anybody is watching this, please contact Flying Colors on that. Yes, let's talk about the compliance part. Like what exactly are the ongoing compliance requirements while setting up this foundation?
So there are two parts on this. One is onboarding compliance and second one is ongoing compliance. Onboarding compliance, you should be able to provide all your identification documents, your KYC details, and also your source of fund and source of wealth details. There are document requirements that need to be done. Then based on that, once your foundation is set up, then as I explained to you, the corporate tax registration application, maintaining of books of accounts, that is also important. Like UAE is following IFRS, International Financial Reporting Standard, as the accounting standard. You need to maintain your books. You need to comply with the tax regulation. You need to comply with the anti-money laundering regulations.
Okay.
So there are things not difficult to follow, very easy to follow, but if you don't follow, you will get into big trouble.
So is it something that a common or layman can actually do it, or is it like professional help required for this?
I'm not telling like for everything you need a professional. I'm not telling, but nothing wrong. Like, because see, when you set up a foundation, it's not a short term objective. You have a long term vision. So it will be better to consult a professional rather than setting up and you messing up.
There are a lot of misconception that is actually misconception myths that's going in the market. So what are the common mistakes that people are making when they're creating a foundation or an SPV?
One thing I already told you, I have foundation, I don't need will. Or the reverse, I have a will, I don't need foundation. This is one.
Correct.
Second thing, foundation does not require to comply with any regulations. This is one thing. Yes, of course, there are regulations need to comply. Third thing, foundation cannot open bank account. It is very difficult. It was difficult, honestly, but nowadays the country is also aligning, the regulations are aligning. So that misconception I heard. Fourth thing, foundation will have 100% confidentiality on data. No one can access, even the government. Of course, if the DIFC has a private registry, if you set up a foundation, they are not going to publish your data in the public domain. That doesn't mean UAE authority or UAE government cannot access it. So these are the main things I heard. Like, and mainly whenever I discuss on foundation, this reply I always get from my client: I'm not that aged, and why should I set up my foundation here? True. So it's not like, we need to set it up after 60, after 70. As I told you before, it's not only for succession, it is for your asset protection also. To do succession, you need to first protect your asset.
Actually incredible, and it was a detailed understanding about everything. But if there anybody is watching and want to understand about the asset protection, what exactly is the advice that you would like to give?
First, before getting into any conclusion, any structure, consult with the professionals. As I told, Flying Color can give you a one-stop solution. We will not just set up your foundation and leave you. We can take care of the onboarding compliance, tax compliance, and ongoing compliances. So consult the professionals, get the right advisory, structure it properly. Don't make it so as much as stronger that you don't need to break it again.
What exactly is the level of wealth somebody should have to think of protecting it?
It depends on like how much you are valuing your wealth.
Okay.
So
I
if you
very
feel
much-
like your wealth you are valuing, you need to have a protection.
Okay.
So there is no bracket actually.
Mm-hmm.
But again, like, if you are having half million dirhams or like, 500,000, 1 million dirham property,
Mhm.
you may not require to have a foundation to protect that property. But if you have a sizable asset, and as I told you, foundation is not only to hold UAE asset, you can hold assets worldwide.
Mhm.
So it depends on your asset, what you are having. Sizable assets must consider setting up a foundation.
Interesting. So, anybody who wants to actually set up this, how can they reach out to you? What exactly is a way to reach out to you?
So if anyone want to set up a foundation, first they want to explain the like their structure and get a proper advisory before getting into the conclusion whether they should set up the foundation or what sort of structure they want. They can book a one-on-one call with us. We first understand the structure and guide the client how they need to do the things, what sort of structure they need to have. Accordingly, we will guide them. Before the things goes to the setup, we make sure that the structure is proper. So we are here. You can always reach out to us, book a one-on-one call, and we'll be happy to assist.
Thank you so much, Firoz. It was actually interesting and wonderful to have you. And obviously, it was a great thing to understand about foundation and SPV, and viewers as well. Thank you so much for like watching us. And if you have any questions or any doubts, you can actually write down your questions on the comments, and also reach out to Firoz as like you mentioned. Okay. Yes, that's it. And yes, one more thing. Please like, share, and subscribe to the videos. Thank you so much.